Welcome back to another video. I'm your trader Sam, and in this video we're going to go through how to remove emotions from your trading. You see, staying emotionless and trading like a robot is extremely important. It's going to make you way more consistent, enter fewer trades, which in the long run is going to be way more beneficial to your bank account. It's going to make you pull out of less trades, and it's really going to protect your capital because you'll always be using a stop loss. But before we do that, guys, I am not a financial advisor. Anything I say in this video is for educational purposes. And you know what time it is. Smash the like button, smash the subscribe button. It's really going to help this channel grow. If you're enjoying this content and you want to see more, by you doing that, it really does help in more ways than you can imagine. So let's get straight into it. So let's just assume that we are looking for a long position right now because we are in this local downtrend. We can see that we have this head and shoulders pattern, which is playing out nicely. We did speak about this in the last update. So if you missed that, you can go and look at that right now. But anyway, we have this neckline over here. You could draw it like that, or you could draw it like this, right? The neckline has been broken, confirming the significance of this head and shoulders pattern. The level that I'm looking at next for a potential long position is this daily and weekly level here at 25,819. Now, to remove emotions from my trading, that is the first step. I have my level marked out. So we don't want to just look at price action and think to ourselves, oh great, I can see a bullish candle here, I'm going to get in. Or that the price has been falling long enough now, I think this may be a good time to be getting into a long position. Everything needs to be systematic. We have our level here, which is the first step of our plan. Let's just imagine that everything is going to plan. And as price comes down to this level, it shows us a bullish reaction by dipping beneath this weekly level, taking out this liquidity over here at this local low. And then price manages to close back above this weekly level right here. If we do start to see a bit more consolidation here, maybe we get a quick rise up and then a drop back down, retesting the weekly level and holding that as support to trigger an entry for a long position. We want to make sure that we know exactly where our invalidation zone is so that we can have a nice stop loss. And we want to know where our take profit zones are to make sure that the risk to reward is worth taking the trade. So if we take our Fibonacci retracement tool from the high to the low down here, let's just say, well, the imaginary low because it hasn't been put in yet, but let's just say that price is going to come down to 25,743. So we put that in roughly there. We can use the long position tool to mark out what the risk to reward is going to be. So we can see here a good take profit zone would be the value area high of this range and this 618 region that we do see here from the Fibonacci tool, because we do have confluence there. It also matches up with this high that was put in, this lower high at 26,739. So this is going to be a level of interest to take profits. If the stop loss were to go beneath the low, let's just say the stop loss goes here at the value area low, we can see that this trade would present itself with a 7.7 risk to reward. Of course, we can be taking profits along the way. We could take profits here at the point of control just to make sure that we do get something from the trade. Shall it just come up and then reverse back down to stop us out? I'm sure you all can relate to that feeling you get when you enter a trade, that shot of excitement, that rush, the feeling of having adrenaline in your body. What I can tell you is this feeling should go away with time, because what happens is the more systematic you become entering these trades, in the sense that you have everything planned out, doing what we just spoke about here, you're going to start to act like a robot and everything will just become second nature. Yes, it'll be extremely important to do all the checks before you get into the trade. You want to be opening up your object tree and looking at all your different levels and all the different tools that you use to mark out your confluence. You don't want to get complacent, but eventually that feeling will go away because you'll have everything planned out and you'll just be reacting to the plan that you've made out. So when things don't go to plan, you'll simply just stay out of the trade with zero emotions. And the same will be for when you enter the trade. You'll literally have no emotions because you will know that your stop loss is there in the right position. Shall this trade go against you? And the confidence that you give yourself by doing all of this work before entering the trade will just lift all that stress off of your shoulders. Because that feeling that you're currently getting when you enter trades, a lot of that is fear-based. It's self-preservation. You'll hear people talking about mindset and psychology a lot. But the truth of the matter is there's no sort of meditation or practices that you can do. Although those things do help for, just general living. The best way to calm your nerves when trading is having a plan and trading that plan. And at the end of the day, the most important thing is risk management. And that comes from having a plan as well. That's going to calm your nerves. And risk management really comes down to having a plan and sticking to that plan. We want to have risk to reward at the forefront of every trade. Another important aspect of staying emotionless is accepting that you're not going to win every trade. There's no trader out there that can win every trade. Yes, you can increase your odds with certain things. However, you just have to accept that you're not going to win every trade. So that means when a trade is going against you, don't move your stop loss. Accept that price is going to come down and hit your stop loss. Don't give it room, because this will do way more harm than good. For example, if you keep moving your stop loss all the time, you're not going to have the proper data when you're journaling. So you should be journaling after every trade so that you can look back and see the mistakes that you're making. If you keep moving your stop loss all the time, even if the trade goes for you and moves in the direction that you're wanting, you're not going to have that data to properly scrutinize your trading journal, which won't help you make the adjustments moving forwards. If you lose 2 trades in a day, take some time off and come back the next day. The charts are always going to be here. There's no point in revenge trading. Let's look at another example over here, this time a short position, where we had this nice reaction off this sloping resistance trend line for the short position. So obviously on the third touch of this trend line, we did get a massive drop. I just want to highlight here the importance of waiting for confirmation and not getting overly excited by setting any limit orders or waiting for a first touch of a zone before jumping in. So right here, we did see a slight rejection of this sloping trend line. However, this wasn't enough confirmation for the trade. To remove emotions a little bit more, what you could have done in this situation was wait for the potential drop, which in itself is a sign of weakness, and then get in on the retest. So as price did come back up here, we can see that this local lower high right over here, right? Price came up above it, failed to gain acceptance, and we had this massive sign of weakness here with this 1 hour candle, which failed to gain any kind of acceptance above that zone. And you can see this massive wick here, which is basically an SFP of that level right there. By remaining patient and not just jumping in as soon as your level is hit, and by using a market order rather than a limit order, it gives you that little bit of time just to analyze the situation a bit better, which will help you when you want to use the long or short position tool to calculate where your stop loss is going to be, where your entry is going to be, and where you're going to take profits. When I'm doing my trading on Bybit, I religiously use the stop loss, entry, and take profit tool. It makes things so much easier and just takes away all of the guesswork. If you want to learn more about trading psychology and risk management, check the link in the description below to our Legends Discord community. That brings us to the end of this video about keeping your emotions in check. Trade well, guys, and I'll catch you on the next one. Ciao.